Taking profit at a fixed 20% target is mathematically guaranteed to destroy your portfolio over time, even with a high win rate. Most traders think a win is a win, but the math proves otherwise. If you risk $1 to make $1, you need to be right 60% of the time just to cover fees and slippage. To actually build wealth, you don't need to win more often, you need to win bigger. But this triggers a psychological trap called the disposition effect. You panic sell winners to lock in safety, while holding losers hoping they bounce back. You are literally cutting your flowers to water your weeds. Here is the structural fix. Stop using arbitrary percentage targets. Instead, use a dynamic trailing structure. You place your exit only when the market structure itself breaks, not when you feel anxious. The ultimate pro move is the free ride method. Sell exactly half your position when you hit 2x your risk. This locks in a break-even state, allowing the remaining half to capture infinite upside with zero emotional stress. Plan your exit before you enter and never cap your upside.